Hello, good morning. From my time here in Nigeria, my name is Pharmacist Jacob Daudagwari. I'm a trained pharmacist and a forex trader. Today, I want us to learn how to play psychological level on gold. So let's go straight to our chart, psychological level on gold. Now, what is psychological level? Now, psychological levels in forex trading refer to price levels that are often seen as significant by traders and can influence market behavior. These levels are typically round numbers or whole figures, basically, that traders perceive as important due to their simplicity and memorabilities. They are very simple to remember and very easy to memorize. So basically, psychological levels simply mean round numbers that most traders, especially the big players in the market, pay attention to. They use the psychological level to execute trade. you know they use it to put their stop loss and take profit. So psychological level in forex trading is very significant. So these are price levels ending in zeros, such as 1:1:0:0:0, 1:2:0:0:0, 1:5:00 in currency pairs. Traders often place stop loss, take profit orders, or entry orders around these levels, making them areas of increased market activity. So we use psychological level to place trade, to place our take profit, to place our stop loss, orders, In fact, because of all these activities, even retail traders like us pay attention, close attention to it because they play a very significant importance in the market. So because many traders and even hedge funds and bigger boys in the market pay attention to it, these areas they tend to have an increased market activity. We use psychological level to as support and resistance. Now, psychological levels often act as support and resistance. When the price approaches a psychological level, it may struggle to break through, as traders might place buy or sell orders at those points. So they act as support and resistance too. Very simple. Now, market sentiment, these levels can influence traders' sentiment. For example, if a currency pair breaks through a significant psychological level, it might trigger a strong market reaction, leading to increased volatility. So, because many of us, even retail traders, know that psychological level play very significant importance in the market, you know, because of the market sentiment attached to it, they tend to increase volatility whenever price get to that level. So, it's very important for us to know how to play this level because it will help us in executing our trade, in placing our stop loss and our take profit. Now, traders often use psychological levels to plan their trade, setting entry and exit point around these levels to capitalize on expected market reactions. So, understanding psychological level can help traders anticipate potential market movement and make more informed trading decisions. They are key component of technical analysis and are often used in conjunction with other indicators and analysis techniques. But for us, me, I'm a day trader. So basically, I use technical analysis. I use price action. I don't use indicator. So I follow the market. I follow what the market does, basically. So using psychological level helps me a lot to execute my trade, to put my take profit, stop loss, and all that. So let's proceed straight uh, to the chart to start plotting our psychological level. So the first thing we need to do is to know where the price is at currently. To know where the price is at currently. Then we use our horizontal ray and then place it where the price is at currently. Now we use 50 pips in gold. 50 pips to draw our psychological level in gold. 50 pips. 50 pips. So this price is at 333.4.530, but we'll remove those digit numbers and the 4 and place 5 there. So we have 335.000. This becomes our psychological level. Yeah. Then we place another one here to put our psychological level. So the previous one was 3335.00. So this one will be 3340.00. So we eliminate these numbers and put our 000. Then we place our psychological level. So the next one will be 45. The first one was 35. The next one was 3340. Then the next one is 3345. So we'll be adding 50-50 pips. That's how to draw psychological levels on board. We'll be adding 50-50 pips, 50-50 pips, 50-50 pips. The first one was 3345.00. The next one was 33 uh, 40.00. Now this one will be 3345, 50 pips, 0.000, 3345.00. So we put another, we look for the horizontal ray again and look for another psychological level here. If this one is 45, the next one will be 50. The next one will be 50, 3350.00, 3350.00. The next one will be 55.00, 3355.00, 3355.00. The next one, 3355.00. This is as easy as that. This is how to play psychological level on Go. And this is crazy because Go respect zone to zone movement. So plotting this psychological level will go a long way in helping us knowing when to put our take profit and when to get out of the market. You know, one of the most important things one can learn in this market is knowing when to enter and when to get out. Knowing when to enter and when to get out. When to enter and when to get out of the market is very essential because if you don't know when to enter and when to get out, you may be caught unaware. And whatever you have made in the market, you may tend to lose it. And our intention or our goal in this market is to make profit. So we wouldn't want to make profit and then lose it to the market. That's not good. So our money management must be a top notch for us to be able to protect what we have gotten. So this is 3365.00. 3365.0. So the first one we have 3335.00. The next one we have 3340.00. The next one is 3345.00. The next one is 3350.00. The next one is 3355.00 and 3360.00, 3365.00. We'll be adding 50-50 pips. So let's add some few one here downwards here. So if the first one is 3335.00, this one below here will be 3330.00. So 50-50 pips each. This is how to plot psychological level on gold. It's as simple as this. And like I said earlier, it's very important because it plays a very major role in knowing when to enter and when to get out of the market. When to enter and when to get out of the market. It is important for us to know when to enter and when to get out of the market. And psychological level plays a very vital role in determining when we should enter the market and when we should also get out of the market. So I believe uh, you have learned something very important today, knowing how to plot psychological level on gold. We just place 50-50 pips, 50-50 pips. Knowing this, and when you add it to your own confluences, it will go a long way in making you to become more profitable in the market. Our goal, our concern is to become profitable so that we can be able to achieve those our dreams. Those are our goal. Every trader has a dream. At least we should be able to achieve that dream of having time to spend with our family, having time, you know, to serve God, having time to meditate on things that really matters like family, your God, your personal health. Those things are very important. So knowing this will go a long way in helping you achieving those dreams of traveling to places you want to travel, those dreams of buying the kind of house you want to buy, those dreams of, you know, getting um, the comfort you are looking for without stressing yourself, without 9 to 5. So knowing this and adding it to your own confluences will go a long way in making you to become very, very successful. So this is the simple way of, you know, plotting psychological level on goal. Psychological level on goal. It's as simple as this. And like I said, understanding these psychological levels can help you as a trader to anticipate potential market movement and can make more and help you make more informed decision, trading decision in the market. These are key level. They are key component of technical analysis, and they are very important because major players in the sector pay attention to it. People like big boys, Warren Buffett, major banks, central banks, individual bigger boys. We, the retail traders, we should also pay attention to it. If those guys pay attention to it, we also should be able to pay attention to it because we are the minority in the market. But when you follow those big boys, you'll be able to what? To make some money for yourself. So knowing this, you'll be able to know when to enter and when to get out of the market. When to enter and when to get out of the market. So you can see this is our psychological level on go. And if you look at it carefully, you find out that anytime price get to the psychological level, it tend to react most of the time. You can see here, price react here. There was reaction here. Look at here, there was reaction here. If you look at this one too, there was a reaction here. If you look at here too, there was reaction here. Even far from our left, there was reaction here. So most of the time you discover that price tend to react on psychological level. Even here, there was reaction here. So knowing this and adding it to your confluences will go a long way in helping you to become very, very successful because our goal is to make money in the market and not to lose it back in the market. So if today is your first time coming in contact with my video, please kindly subscribe, like it, so that whenever I release very informative video on YouTube, YouTube can also recommend it to you. And please forward it to, share it to your friends that needed to know how to draw psychological levels on goal and the importance of psychological level as I have discussed it earlier. Thank you so much. Thank you so much. Thank you so much as you liked it and share it and subscribe it. My name still remains Pharmacist Jacob Daudagwari from Nigeria, a trained pharmacist and a forex trader. God bless you and see you next time. Bye.